to my channel. You're welcome. Today I'm going to talk about market structure. If you are a pro trader, if you're already a professional in the business, just stay tuned to the end of the teaching. You're going to learn a lot. I also have something in package for you. It's going to be of great value. If you are a new in the business, this is really for you. Pay attention, because this is all you need to be successful in Forex trading. You don't need a lot of things you're already learning. You need to know market structure, because I tell my students that markets move in a circle, and I'm going to show you how the market moves in a circle. You to get to a particular point, if I'm following the structure with the right time frame, which I'm going to go into that later, you're going to see when the structure begins to change, and you begin to look at taking entering trade in the opposite direction. So that's how it is. So let's go down to business. I'm going to show you how the market structure is. So pay attention. All right. So in an uptrend, what we expect is higher highs and higher lows. Higher highs, higher lows. This is the low. This is a low. This is higher low. These are higher lows. And these are highs. And these are higher highs. Okay? So when you see the market like this, and you see it refusing to break the previous high, coming down, you take this as what? A resistance. Please forgive my drawing. You take this as a resistance. Okay? Now, when it comes back and tests this level, okay, and hits here, this now becomes a confirmed support. A confirmed support. Okay, so what we are looking at now is market to change market structure. So in most cases, you're going to see what market will do like this. Okay, once this happened, it has formed what they call a lower high. Once you see this, you begin to look at a sell position. Okay, a sell position. Now you're going to see this market is going to come here. Now if you couldn't take opportunity, if you couldn't take advantage of this level, if you couldn't take advantage of that signal, now you have to wait for the market to confirm a lower low. This was a lower high. This was the first signal here. First signal here. Now if you couldn't take opportunity of this signal, now you have to wait. You have to take opportunity in a second signal, waiting for it to form what they call a lower. Yeah. This was a lower high. Sorry, this was a lower high. So you have to wait for the opportunity to form what they call a lower low. And the lower low is going to be your second signal, which is going to be this. When this happens, you wait for market to break this level, because that's the second signal. Once the market breaks this level now, that's where you enter a sell position. This is going to be your second signal, right? That's the second signal. Now market is going to keep forming a lower low and a lower high. So that's how it is. Okay? Forgive my drawing. Now when you see the market refusing to refuses to form a lower low, you take that point as your own support. Okay? You put a line here. Alright? You see, to start going up, changing market structure, forming a higher low. Okay? Once you see this, this is your first, another signal here. Okay? Boom. It breaks. It breaks this level and join. It will join here. It will break this level and join here. Hope you understand. This is what we call market structure. Market moves in a circle. Forgive my drawing, but I hope you understand. Now, why a lot of people have a lower win rate, they know this already, but they look at they are looking at the market structure using the wrong time frame. As a day trader, if you look at the market structure using the right time frame, you are going to have more win rate. You know, like what I mean is that if you are looking at using the 15 minute chart to look at market structure, you're going to be taking more trades, but you're going to have some failed signals. But if you are using daily charts, you're going to be taking fewer trades, but more of accuracy. But I personally use 4 hours for my structure because it gives me signal weekly. As in a week, I can take more like 5 trades in a week because I'm using the 4-hour chart. So I strongly recommend you should use the 4-hour charts for your market structure, to look at market structure. Okay, depending on the type of trader you are. If you are a range trader, this is the level you look at to take your trade. Okay, if you are a range trader, that's the level you look at to take your trade. Okay, are you with me? That's the level you look at to take your trade. If you are a trend continuation trader, this is where you take your trade. At this point is where you take your trade. Once the market comes pull back, these are the points you take your trade. Okay? As a range trader, you take at this point. When it's bouncing at this level, you take your trade. But as a reversal trader, this is where you take your trades. Once the lower low, you begin to time it here. It has formed what they call a lower high. Yes, if you want to take it, you're fine. But to have more accuracy, you wait for it to form what they call a lower low. Push back, break below, you take it here. Because this is a confirmed sell. In the buy direction, it has formed what they call a higher low at this level. You wait, just what the way you trade it here, this is what you do here. You begin to pump wait at it here. Once it confirms a higher high and break above this level. Let me understand. That's where you take your trade. If you have any question, you can come to the comment section and drop your question below. I will answer you as fast as I can. But this is what market structure is all about. Market move in a circle. All you need to do is wait for the perfect setup. If you are a reversal trader, you are rushing to take the trade when this level, when the support here is still intact. You're going to have what they call a bounce back. Why a lot of people have what they call fake out is because it's the right place as a reversal trader to take your trade. Once the market breaks down, you wait. Once it confirms a lower low, once the market breaks down like this, it confirms the lower low, you wait. As it's coming down, this is your entry. Sell trade. This is a perfect entry. Okay? Now, in a buy level, this is what you do. Comes here. Once the market comes here and break here, you buy. This is what you buy. This is how the market works. You have to wait. If you cannot wait in the higher time frame, this thing, if you begin to practice this in the higher time frame, like 4 hour, you're going to have more win rate. Okay, now, like I said, just practice this on your demo account. Begin to use the 4 hour to look at market structure. You're going to see what I mean. Like, let me go to the chart and show you what I'm trying to say. Like this is a trend. This is a trend here. Okay, it's a trend. The market market came down here. You can see when it was selling and see the trend. But let's use this as an example. It made a low, came up, made a higher low. These are higher lows, higher lows, higher lows, and higher highs, higher highs, higher highs, higher lows, higher high, higher lows. Now, this market came and made what they call a high here. The next one couldn't break this high, so it becomes what? A resistance. We take note of this level. Okay? That becomes a resistance. Take note of that level. So what are we waiting for? A break here. When the market breaks here, come down. You wait for once like I've showed you in the diagram, the drawing board. You wait for the right entry for sell here. If it breaks above, you wait for the right entry for buy. Hope you understand. Yes. So this is what I was trying to explain. So thank you for watching. Bye.